Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. Another action-packed video for you today. We're going to be taking an updated look at miner market caps compared to their HODL. In addition to that, we just received June production results from Bitdeer, IREN's attending an AI conference, and of course, an update on the Riot Bitfarms saga, with Riot continuing to sell shares in the open market. We're going to be discussing all of that and more. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comments section below which of the Bitcoin miners you're most bullish on currently and why. With that being said, let's get into today's video. All right, guys, Wednesday afternoon, middle of the trading week, away we go. Another exciting episode today, Anthony. We've seen a lot of news, some big moves in terms of share price over the last few weeks in the Bitcoin mining sector. We thought it was high time we dusted off your famous HODL versus market cap slide here. We're going to be taking an updated look at that throughout the presentation. We also have production results out from Bitdeer, some news from IREN attending an AI conference we wanted to dig into, and of course, continued selling in the Riot Bitfarms saga. We wanted to take an updated look at the plans those companies have or strategies that they've set out. So a lot on the agenda, Anthony. Before we get into it, Bitcoin sitting above 109 this morning, making it look like we may be getting a run back into the 110 or the all-time high type of range. Could be on the cusp of that. The miners themselves split across the board today. You can see some strength, some weakness, really a mixed bag, as you like to say.
Yeah, so, Bitcoin price has been in this nice band now for a long time. I was looking at the 3-month table today, and it seems to be in that, over 100,000 for the best part of the last 3 months, showing more stability. Not really seen as many all-time highs lately. Did reach 112,000 earlier in the year, but we're getting close. 110,000 nearly reached today, and well above 109,000. Now, from the miner perspective, we'd expect with a nice little push on Bitcoin price, we'd see some sort of minor increase as well. It's a bit of a mixed bag. Most of the miners are actually slightly in the red, but a couple of them are doing okay today. The likes of Cypher and CleanSpark up there, just 3.5% and 2.75% respectively. Mara and Riot also in the red. But apart from those, their majority of miners are sort of in red today. And actually, if you look at the range, most of those miners in the red are at the red at the moment, so they have been significantly higher. So Bitcoin price, has been a little bit volatile up to that 109,500, and as it drops, maybe $100, the mining machines drop as well by the same multiplied by about 3. So that's where you see that volatility there. In terms of volumes, we're looking at again, good volumes for a lot of these miners. Cypher's had an amazing run of volume over the last week or so, over $50 million of shares, and we're only literally 3 to 4 hours into the trading day, and they're already over 25 million shares traded. CleanSpark over 27 million. Mara 44 million shares traded in the first 3.5 hours as well. So, and Riot 35 million. So a lot of trading out there. But overall, not any really big moves. Not like we saw yesterday and the last few days, where we've seen this storyline about the Ethereum and the treasury management companies now deciding to move, into Ethereum. We've seen a lot move into Bitcoin, but there's now a real movement to move into Ethereum mining, and one of the miners we cover, Bit Digital, is exactly doing that.
Yeah, they certainly are. We also have BTCS coming on next week. They just upsized that raise to buy, I believe, 225 million worth of Ethereum now. So the race is on in terms of the Ethereum strategy companies. Now, maybe we'll start there, Anthony. We've seen Bit Digital sell their Bitcoin. They've moved over to Ethereum. They've raised money. They've bought a ton more Ethereum, up over 100,000 tokens now. So if we bring up your HODL versus market cap, I'm curious to maybe walk through Bit Digital. You also called out Cypher and CleanSpark. Maybe we'll start with those three, and you can give us an update on your analysis.
Yeah, so we look at this table here. It's really identifying the value of the HODL as it is today compared to where their market capitalization is. And If you look at Bit Digital, yes, they sold their remaining Bitcoin. They had about 24,000 in Ethereum, and they just raised $172 million in the recent offering. And so with that funding there, they've just gone out and bought a ton of Ethereum, and now they've got over 100,603 Ethereum, which puts them in that sort of top 2 or 3 companies with Ethereum in the treasury from a public company's perspective. That valuation as at today, they're around about 268 million, which is about 25.7% of the total value of the company. Now, bear in mind, if you look at the total value of the company, they're over $1 billion now. That's the first time we've seen Bit Digital hit those lofty heights since we've been covering them over the last 18 months. And in fact, Sam Tabar was only on the podcast, literally just the week before last, explaining, how he felt the market wasn't really giving his company enough, enough credit for what they're doing. Well, you can see now that the market's paying full attention now to what Bit Digital are doing. Their market values jumped significantly. Yes, they did raise a significant amount of money through an offering there, so they created more shares. But by creating more shares, you don't get immediate value for them shares. So when it was announced they were diluting, the share price was around about $2.40. It dropped to less than $2 on the announcement of those shares. In fact, it went down as low as $1.90. A couple of execs, including Sam Tabar, went out and bought a ton of personal shares for themselves. And the share price, rallied all the way past $4. So in the space of literally a week, 2 of the directors of Bit Digital made, really nice gains. Obviously, they're not selling them straight away because they believe in the company. But it just goes to show when a director or a senior member of the team there goes out and buys shares because he believes in the company, that can also have a real impact on how retail investors and institutional investors look at that company.
On the flip side, Anthony, if they sell shares, obviously a big red flag as well. So I've learned that over the last couple of years. Anytime you see large insider buying or selling, I should probably be following suit with that strategy. So that's a great update on Bit Digital. Now, Cypher, CleanSpark, speaking of selling shares, can we get an update there, Anthony, on percent HODL versus market cap? CleanSpark's interesting. We're going to come on to IREN later in the presentation. These two companies duking it out at the 50 exahash per second level or league, but completely different treasury strategies. One hodling excessively, one zero hodl, no plans of hodl. So let's take a look there.
Yeah, absolutely. And if you look at CleanSpark, market capitalization just over 3.2 billion. 12,608 is their current total of Bitcoin as at the end of June, which was in their operational update this week. That has a value of $1.37 billion, and that represents about 42% of today's market capitalization. So it was higher previously, but this last week or so, or last month or so, we've seen the share price, a lot of these miners really peak really well, far quicker than the pace they're actually mining at the moment. So that's why you see some of these percentages come down. And in terms of Cypher, they've got a market capitalization, again, over $2 billion. Share price has done extremely well. Last 2 or 3 weeks, it's nearly doubled in value. That puts them back over 2.2 billion. Their HODL, they've been selling Bitcoin this year to pay for their operational and capital growth. So that's come down. It was well over 2,000 Bitcoin earlier in the year. Now it's at 1,063. That's got a valuation of about $116 million at today's price, 5.3% of their market capitalization at today's date.
Yeah, really interesting. And again, keep IREN in mind, you guys. We're going to come back to that one later in the presentation, talk about the AI kind of X factor here. Now, the next company we wanted to get into, Bitdeer, they just came out with their monthly production results for June. Now, this is an interesting one. Yesterday, we talked about the different strategies these miners are employing. Now, Bitdeer really has fully vertically integrated the company, everything from creating the R&D, the machines themselves, the Seal Miner platform, the mining, the hosting, the cloud GPUs, and of course, with the most recent Fox Creek acquisition in Alberta, they now own the power production itself as well. So this is a really interesting story. They had a big run in Q4 last year. Share prices pulled back, Anthony, but when you look down the list, of the sites, the locations that they have in their portfolio, a Bitdeer is not one you want to overlook.
No, they've got a ton of power. We're talking not talking power pipeline, we're talking power in existence. So they're already operating, over 1 gigawatt of power at their sites at the moment. That's growing to about 2.7 gigawatts of power by the end of next year. So an immense amount of power. A lot of it coming online actually this year. So as we get through Q3, Q4, a lot of these sites are going to be energizing, especially Bhutan. At the moment, Bhutan is operating at 132 megawatts, and that will be the remaining 368 megawatts will be coming online by the end of Q3. So in the next 3 months, a significant amount of hash rate. Also, we've seen lots of activity in Norway where all their equipment are now been delivered and full energization expected to be completed again in Q3 2025. So two of their big sites or locations outside of the US coming online, and that's great for the likes of Bitdeer because a lot of people are still worried about tariffs and charges. The president, he said he'd bring out, I think, 99 deals in the next 3 months, and I think he's managed 9 deals. So coming towards the end of that 3 month period, hasn't quite reached that target. And you know what happens when he doesn't reach target? The tariffs seem to go up overnight, and so Bitdeer are effectively probably one of the few miners out there that can avoid that directly because they can determine where to put the machines that they're actually building themselves. So they don't rely on other suppliers. They're actually building the seal miners themselves. And seal miner A1, A2s have been in mass production already this year. And seal miner A3 has already gone through testing and it will now go to mass production. And seal miner A4 which is, we thought it was a sort of like a wish list of trying to get down to 5 joules a terahash. That looks more and more likely because everything else they've achieved and they fully expect to deliver that in the time frame they said. So I think that was by Q1 2026. So we'll probably get a lot more further updates on that particular model during the remainder of this year in readiness for next year. But we know, having met with the team down in Las Vegas for the big conference, we talked about the seal miner A3, gone through production there. We're hoping at some stage to get a couple of test units and maybe, do some validations of our own on the performance of those machines compared to maybe some competitors' machines and see how that all works out. But I can tell you now, looking at the update today, and if you look at how many machines have been delivered, how many machines have been energized, and how many machines have been sold, I can tell you now that if you look at it, 5.3 exahash of machines have been sold to external customers. Now, if that's the A2 seal miner, then you're looking at around about 23,000 units of machines to make up 5.3 exahash. That's based on every machine operating around about 226 terahash per machine. So there's a lot of machines there, and that's only a third of what's been produced. So the other 2/3 are going into, you guessed it, Bitdeer's facilities. Because, at the end of the day, they have a win-win strategy. They either sell the machines, which they're able to produce, and I've been to Singapore and I've met with their chief business officer there. They can produce those machines significantly cheaper than some of the market peers are able to sell at market rates there. So the margins are going to be really good. So having sold, as I say, over 23,000 machines, and a lot more of the seal miner A3 will be sold because they had larger orders than what's been produced for the seal miner A2. But a lot of customers decided, you know what, we're going to wait. Because you've now told us that the seal miner A3 is going to be on track to deliver such a better efficiency, we're going to put that investment into the seal miner A3. And Bitdeer just go, well, that's fine, because we'll just put those seal miner A2 units into our facilities. We're growing facilities probably quicker than we're growing actual mining machines. And so, it's a win. You can put cheaper machines that are still efficient. The seal miner A2 is still around about 16.5 joules a terahash, which is up there with the S21 miner. It's going to bring, and if I look at what Bitdeer's current fleet efficiency is, now this is the last time they actually updated it on their record, so it won't be the exact figure, but they had an efficiency of 29 joules a terahash. Now, I've asked the company if they can give us a more updated number because they have started to, the last few months, start to put significant amounts of their new machines into their facilities. That figure's got to come down because at the moment it's nearly twice as inefficient as the IREN fleet. And that means that that's going to impact the price of producing a Bitcoin because there's two elements to it. One is the cost of energy, and we know that Bitdeer are able to attract reasonably good costs because they've got some facilities, especially in the US, that are close to where other miners are. So when we talk about Riot, we can talk about Bitdeer in the same sentence because you could throw a cricket ball from the Riot complex and it would land in the Bitdeer complex next door to it. So that's how close those two organizations are in Rockdale. And so they'll be attracting a similar price from the market price for energy over there. So they'll be getting sort of that 3 to 3.5 cents. But what you also need the efficiency of the fleet. And 29 joules a terahash compared to say, even compared to Riot's is an average of, I think, about 21. That would mean Riot would be significantly more efficient and be able to produce Bitcoin far cheaper than Bitdeer. So I think that number's probably getting its way down towards 23 now at the moment, probably even, and it's going to be certainly a lot less when they fill their target this year, which is going to rise from its current 16.5 exahash all the way up to 40. And with the way they're going at the moment, not many people are going to bet against them achieving that.
Yeah, really interesting dialogue there, Anthony. And as I mentioned, Bitdeer in a very unique and advantageous position here. So we just talked about a few of the metrics. Obviously, the fleet efficiency, we're looking to get a specific update there. In terms of the production numbers for the month of June, what were your thoughts on those?
Well, obviously, there was some good points and some, obviously some challenges for Bitdeer. That in terms of the good points, they were able to increase their hash rate by over 20% from the previous month. So the previous month, operational hash rate 13.6, and it's gone up to 16.5. So that's a nice increase in hash rate there. Bitcoin mined again, that increased, even though it was 1 day less mining, 203 compared to 196. I'd have expected that to be a little bit higher. But obviously, we had issues with a number of miners where they've had to curtail through the month of June through weather conditions and through other issues generally associated with heat. And so that may well have happened with Bitdeer as well. So we'll give them the benefit of doubt from that there. As I highlighted earlier, operational power 1098, total global power 2,690 megawatts, which is 2.7 gigawatts. The fleet efficiency, we'd like to know what that up-to-date figure is there. It's certainly not 29 anymore, not with the amounts of machines they're putting in. And in terms of their HODL, that's increased quite nicely. They only sold 52 of their production this month, so that increased to 1,502. That has a valuation. That's at the end of June when the Bitcoin price was around about $107,000 of 160.9 million. So it'll be higher than that today. Plus, it'll have about 7 or 8 days more production on top of that there. So probably edging that way a bit closer to maybe $200 million in terms of valuation. And that's an improvement on what we saw in the previous month there because the Bitcoin price has increased and also the amount of HODLs increase as well. So overall, some good points there. Production, I'd expect more. If you look at what the peers are producing, when the great metrics look at this is the one I came up with 4 or 5 years ago, is the Bitcoin mined per exahash. This tends to put every miner on an even keel. Because that's, you're then competing against exahash, then not against any size of hash rate. And Bitdeer were producing 13.5 per exahash, where you look at the top miners and 4 or 5 of them were able to achieve 15.1. So again, probably about 10 or 12% more in terms of production than Bitdeer. But I'm assuming when you look at the amount of sites they've got there, maybe they have some issues, and obviously we'll probably try and get understand more about it. If this continues, we'll obviously at the next call with the company, we'll get some information about that.
Yeah, we certainly will. And didn't you say you're getting a Seal Miner tattoo when the A4 comes out, Anthony, if they hit that 5 exahash?
Yeah,
Thought,
it will certainly say Seal on it. Might not say Seal Miner.
Navy SEAL, there you go. Hey, I wanted to jump over to the market cap slide again. You just made reference to Bitdeer's HODL growing. The other one I thought might be able to dovetail into here. Speaking of that vertical integration on the miner front, Mara Holdings, they've also invested in Auradine, which is another miner manufacturer. So I thought maybe we could tackle these together, Anthony, taking a look at HODL market cap, first on Bitdeer and then take a look at Mara.
So in terms of Bitdeer, as I say, they've reached that 1500 mark, 1502 Bitcoin. Current market capitalization at the moment, 2.4 billion. That was as high as $4 billion not too many months ago. So, the share price over the last few months, instead of, increasing like some of their peer miners, has actually pulled back a little bit. Maybe the recent convertible note had an impact on it because it's raising capital that they need to grow, and they're going to grow exponentially over the next 18 months. But the share price there, yeah, 2.4 billion. And if you look at what the HODL represents, it's about 6.8%. So quite a small value of their actual price there. And Mara Holdings, who have a similar position, they've invested heavily into a company called Auradine, a Palo Alto company, a load of tech people there who have designed and built mining machines, and Mara worked with them, and they're starting to roll out now as well. So Mara have the largest hodl of all the Bitcoin miners. It's already over 50,000 Bitcoin. That has a value of $5.4 billion as at today's price. Their market capitalization has increased quite nicely over the last few weeks. It's over 6 billion now, 6.2 billion now. And so that hodl represents 87.6%. So remember, not too long ago, it was actually trading over 100% of the actual market capitalization. So effectively not really getting any premium for any of the other assets held within the company there. Now, they do have convertible notes as debt as well, but they do have well over 300,000 mining machines, and they do own probably 60 to 70% of the sites that they operate in now. So there's a lot of assets on the balance sheet there. We'll pay more attention as the next round of earnings comes through. We'll take this to another level in the next round of earnings, because we'll have more up-to-date data, and we'll be able to analyze it in certain ways to give you a real indication of the companies that hodl compared to those that aren't. Because we've highlighted obviously IREN, they don't hodl, they sell on a daily basis. Dan's been very clear on every podcast that we've ever had him on to say that he's using the Bitcoin that they produce on a daily basis to grow the company. And if you look at their market capitalization today, 4.14 billion, and then go up the list to Riot's market capitalization at 4.14 billion, you'll notice that IREN's actually surpassed Riot today in terms of market capitalization. So, and they don't have a hodl. It does make me wonder how you get valuation on some of these miners. Yes, we obviously IREN are having a lot of exposure at the moment, a lot of interest from not only the institutional community but also the retail community. Everything they're touching seems to be turning to gold to a certain extent. I mean, they fulfilled their target at the Childress site. They've already started, the foundation already been laid for Horizon 1. And obviously with Sweetwater 1 and 2, which is another 2 gigawatts, you have an immense amount of future capability, not at the level it needs to be at the moment. It's a lot of it's still in planning stages, but it's the capability of the future. You can't do everything tomorrow. You have to plan to do everything. And over the next sort of 2 years, all these sites will get to a position where they are ready to operate and be energized. In fact, Sweetwater 1 gets energized in April next year, and Sweetwater 2 is towards the end of 2027. So lots happening there, but no hodl, 4 billion market capitalization, and effectively with Core Scientific share price dropping in the last few days since the announcement of their deal, IREN seems to be in second place to Mara at the moment, Bryce.
Yeah, just incredible to see the leaderboard here moving in real time, Anthony. Now, the next two we wanted to talk about, this is always a highly popular discussion, Anthony. Riot continuing to sell shares of Bitfarms on the open market here. So we've got the SEC filings from both companies. We're going to go through kind of both sides of the story here, look at what these companies are doing in terms of a strategy. But again, Riot continuing to push shares out. They took the hit for this last quarter, so won't be taking as much of an impact on their books, but looking to free up some of the remaining cash flow for future initiatives.
Yeah, and again, it's the opportunity of using that money now rather than holding it in another company in the expectation that it's going to rise or not. Can you do more with it now, or do you wait for Bitfarms to continue doing what they're doing and achieve some value in the future, and then redeem your position? Because at the moment it's in a bit of a stalemate. They didn't get control of the company. They agreed to this 3-year sort of standoff position. So I suppose in the back of the mind there, from Wright's position, they felt actually, do we need this investment to continue? We've got so much to do at Corsicana in terms of creating that 600 megawatts towards HPC. And, this isn't going to obviously fulfill that, but it will sort of help, to a certain extent. So it looks like they're going to slowly, over these next few months, reduce that size, probably down to zero. It's not great for Riot because they've, like you say, they took the hit in Q1, so it was obviously a big exposure to that. It was, 90 million shares, and effectively call it $1.50 per share is what they've lost. So $135 million lost on the deal. From Bitfarms' perspective, it's just as bad because effectively their share price was $2.40. The share price has been under $1 for most of this year as all these things have been going on, and the distraction from getting on and doing what you want to do. That's what these companies should be doing. The focus on what you want to do. Obviously, Bitfarms are trying to do that. The distraction of another company coming in to try and acquire them over the past sort of 18 months hasn't just happened this year. The conversation started 18 months ago. That's got to be a distraction. Hopefully now Bitfarms can get on and do what they need to do, and they've got some real opportunities to deliver something, as we'll talk about in a second.
Yeah, we certainly will. So if we start with Riot, you talk about them pulling the cash out of this deal to further, I guess, the capital expenditure list we've got here for 2025, but specifically this data center development, the Corsicana facility. It's interesting you look at the market cap versus IREN. Now, Riot has a tremendous amount of Bitcoin in the neighborhood of 20,000 coins. IREN has none. IREN has obviously the big Horizon 1 and Sweetwater campus. However, Riot has that 600 megawatts at Corsicana that's ready to go. Earthworks has been completed. That site is very well developed compared to their peers. So this is an interesting one, Anthony, to talk about not only the strategy that they're employing at Corsicana, but also the valuation component.
Yeah, and they've put out their tables showing the key expenditure from not just the Corsicana site, but also from the Kentucky site as well. So from Corsicana, which we've been very fortunate to have visited last June, and it is an amazing site. It looks just as good as the actual the pictures that you can see on the screen of the site. And Corsicana Phase 2, they spent 27 million in the first quarter. That's going to be another 38 million forecasted between now and the end of the year. And that's really, that's the capex for the 600 megawatt substation required for this extra piece of estate they have there. Remember, they've used up 400 megawatts for Bitcoin mining. The remaining 600 megawatts is all going to be directed towards high performance compute. And so the 600 megawatt substation and some other long lead items, because some of these items take maybe 12 months to arrange, and that's why you can't plan things for next week. I've been planning for their sites at Sweetwater for quite a while, and it's still got 6 months for next year, and then another 18 months for Sweetwater 2 to come online as well. So these take, they're not going to happen overnight. But what we will see is we'll see the development of these sites, because one thing the miners are doing out there is every time they do an update there, they'll put in the latest renderings of the buildings and show you exactly what's happening. And it's interesting for shareholders. They can see where the money that they've invested in the company is actually going to. So as well as the power, they've also got to make sure they have sufficient land. It's not just about the 600 megawatts. You've got to have supporting land to deliver that as well. So they've made some land purchases at Corsicana, and they've also had to increase the water access, and that's going to be another 55.7 million between now and the end of the year as well. So there's 90 million of expenditure just on effectively the starting point. This is nowhere near buildings going up or anything like that. This is really the starting point. This is going to be hundreds of millions of dollars to deliver this. And so, Riot, as they've done with Bitcoin mining, do tend to plan really well. They'll use whatever levers are available to them. They've got a massive amount of Bitcoin should they need to spend that, well over $2 billion. They have an ATM in place, which they've used, like the other top three miners, over this last 3 or 4 years to a really good effect to grow where they've grown there. And they've also got opportunities, should they announce that they have a potential client, to go to the markets and borrow more money at a lower cost of capital. So they have lots of levers available to them. Yeah, and then there's the other site, Kentucky, where they're going to invest, approximately about another $63 million developing those sites as well, and get that hash rate. Remember, they talked about increasing the hash rate there. It was just over about 1 exahash. Now it's going to try and get it up to 6.5 exahash. And that will get them to their total, which is about 38.4 in terms of their total mining hash rate. So the remainder of the mining hash rate looks like it's going to be delivered at Kentucky. And then all eyes will be on Corsicana as that develops over probably the next 2 years, getting to where it needs to be to deliver a great HPC strategy for them.
Yeah, most definitely. All eyes on Corsicana in terms of Riot. On the Bitfarms side of things, it seems all eyes are on Panther Creek, so we didn't want to leave them out of the discussion. In tandem to this Riot Bitfarms sale saga that's going on, Bitfarms also aggressively pursuing their HPC strategy. So we can take a look at their HODL percent market cap in the 20% neighborhood, Anthony. But really the discussion right now is this Macquarie financing, 300 million total potential, 50 unlocked so far, and these renderings we're starting to see out of Panther Creek. Bitfarms obviously has a lot going on in terms of strategy this year, and looking to really capitalize on this AI trend we're seeing.
Yeah. And one thing to notice, we've talked about Cypher, we've talked about Bitdeer. Both of those two companies got very similar market capitalization amongst Cypher at 2.2, Bitdeer at 2.4 billion. Now we're coming on to Bitfarms, and when you consider Bitfarms has got far more exahash than both of those companies at the moment, they're at 19 exahash as opposed to Cypher and Bitdeer, both around about 16.5, 16.8, I think, in terms of Cypher. And they're valued at literally 4 times the valuation, because Bitfarms today is valued at 550 million. That goes to show you, the market can equally turn on miners. They were trying to get to 21 at the end of last year. And then obviously we saw all the fallout from the Riot strategy to acquire them and how that's gone. But the challenge now is for Bitfarms is, they've got a great amount of mining hash rate online, and they're one of the probably top 2 or 3 Bitcoin miners out there in terms of operations. They do deliver exactly what it says on the tin, month in, month out. Last 4 years, they've been in the top 2 with Hive Digital. So we know they're a great miner. However, the focus now is to utilize some of those sites, because they made an acquisition themselves last year. They bought Stronghold Mining, and Stronghold Mining had some really good sites, of which one of them we're going to talk about now, Panther Creek, in Pennsylvania, a great site. And to help Bitfarms, start this process, because the market capitalization suggests at the moment it's going to be challenging for them to actually raise their own funding. They've managed to have a financing deal with Macquarie Group, who are one of the biggest infrastructure investors, in the HP center data area as well. And they've also done a lot in the Bitcoin mining space as well, especially if you look at the likes of IREN, who probably half of IREN's employees come from Macquarie. So that's a name you'll hear regularly on this podcast in some way, shape or form. But Macquarie have already given them a 50 million tranche of that 300 million to do the drawings and developments of the milestones at Panther Creek. And then obviously once they get past that, then more and more of that 300 million will be released to them. Now, from my estimation, that's not going to get them overly too far. These types of investments are going to need far more than that there. But if we can get to a certain point where they start getting interest from potential clients, and we were fortunate to be in Fort Lauderdale back in March, speaking to some of the bankers down there, and they were expressing a real interest in Panther Creek, saying this was a great opportunity. It seemed to tick every box, so it's not just Bitfarms saying this. This is external people also saying that they had a good potentially good facility there. This one hopefully plays out really well for them and gets them back to where they need to be, because they've seemed to have, like, this last 12 months since that news came out about Riot, they seem to have dropped off the page a little bit. They didn't reach their target. Now they're focusing on HPC, and I'm assuming as the share price dropped below a dollar recently, they have now the chance to sort of, like, get it back above a dollar for a certain amount of time to avoid any SEC validations on them having to address it again. So this potential Panther Creek site looks really good. And they've got three other sites on top of that as well. So I'm only saying Panther Creek, but there are three other sites, and they all tick every box required for HPC. The challenge that Bitfarms have compared to its peer groups is really about raising capital.
Yeah, it certainly is. But like you say, at least the distraction with the Riot proposed buyout is in the rearview mirror, Anthony. You talk about the amount of money that was lost on shares. Then you think about the amount of man hours, time, meetings, lawyer fees, so much that would have gone into that. And now, again, Bitfarms able to really focus on Panther Creek and some of these longer term initiatives. Now, we wanted to finish off the podcast today with a headline out of IREN. They're over at a AI/HPC conference by the name of the Raise Summit. You can see they cleverly have the AI right in the name there, Anthony. What's interesting about this, IREN obviously very involved in the HPC AI space. They're building these data centers, actually advertising at the conference what they're calling build to suit data centers. We've talked extensively about Horizon 1. We've even made reference to Horizon 2 in their most recent press release, and the possibility to expand this data center. So this one quite unique right now, Anthony, and as you say, really been picked up by the retail community here. A lot of HPC AI anticipation, I would say, is baked into this share price.
Yeah, and it looks like they're following two distinct different strategies with regards to HPC. The one is the co-location deal, which we've seen the likes of TeraWulf, Core Scientific, Galaxy, Applied Digital achieve contracts to deliver that type of. But basically, you're responsible for the site. You're not responsible for the GPU's performance or anything like that. There, you're responsible for the site, making sure everything works well, making sure the power's connected, making sure security, all that sort of thing there. So they basically, client would come and bring their own GPUs onto the site there, and you'd be responsible for making sure it's fit for purpose. And you get paid for that, and you get paid very well. We've seen those deals. In fact, those deals were so good, Bryce. They actually put all the numbers into tables for everyone to actually digest, and and have a couple of sips of a stiff drink while they were doing that, to make sure they were reading the right numbers I was reading, because they were really, really good. Now, the flip side of that is those companies that want to go down and be a sort of a core weave effectively by delivering a service using GPUs. Now, we've seen a number of miners, and IREN are one of those that have been doing that. But also, let's not discount Hive Digital. They've been doing it for about the same period of time as well. Remember, they had GPUs from the time they were mining Ethereum, and they've been able to use some of those GPUs because they bought some of the latest GPUs just literally before the actual Ethereum mining stopped, and they had an idea of moving into AI a lot longer than some of these other miners are coming to the space now. So they've utilized some of those GPUs there. They've bought further H100s, and they're looking to expand there. IREN have done exactly the same. They've used their Prince George site to establish a HPC on-demand service there, and they had just over 2,000 GPUs in there previously. They just ordered another 1,300 B200 Blackwell GPUs and a 1,100 B300 Blackwell machines there. So a total of 2,400 Blackwell machines going into Prince George facility up in Canada, and establishing a really sizable business opportunity there for potential customers to come in and access that data. So it's interesting. I mean, my only reservations for that are the fact that it's really expensive when you're buying the GPUs. These sites are expensive to build, but once you've built the site, that if you have a contract to deliver for a client who's going to come in and rent the site effectively, you're the landlord and come in and rent, you know what the payment structure is going to be like for a long time. With regards to an on-demand service, you've got to buy those machines, and we're not talking Bitcoin miner prices. These GPUs are tens of thousands of dollars each, And when you're buying the amount that IREN have just bought there, you're into tens of millions of dollars to buy that level of machines there. So you're investing a significant amount of money. And, with all honesty, you don't know how many customers you're going to get from day one. Yes, they've not just jumped in there and just spent like $50 million without having it. They've been running an on-demand service for a while. That on-demand service has grown organically over the last 18 months. They had, one big client to start with, who was there for about, 5 or 6 months. And then I think they've learned from that. And they've grown the site and they got it to about 80%. I think now it's close to 100% usage. So they've managed to eke out a really good utilization, because it is really all about utilization. You don't want it dropping off, because no revenues, you're still paying for the machines. That's the whole point. I mean, Dan, a year ago, came on the podcast and indicated the first 2 years of revenues would cover the repayment of those machines, and profits then start to appear in year three. So it's not for the faint-hearted. But IREN have had 18 months to deliver what they've delivered at the moment, so they won't be going to this short-sighted. Maybe they feel if they can achieve on a smaller scale, obviously, the likes of what CoreWeave are doing and some of the other hyperscalers are doing in terms of the potential revenues that they can achieve with the latest GPUs, maybe it can be a win-win for IREN on that side. But I think, again, down at Texas, they're fully focused on probably delivering what we call a co-location package with the size of the facilities. Even the 50 megawatts at Childress is the same size as what TeraWulf have just announced, effectively with Core 42. So, and with a second, building going up at Childress, potentially Horizon 2, it sounds like the conversations they're having with potential clients are really positive at the moment.
Yeah, it certainly does. And you can see in their most recent deck, they already make reference to the expansion at Childress, or the potential for that. And these site renderings of Childress looks like they're opening up a position for Horizon 2 there in the top left. So we'll see how that continues as we get these monthly production updates. We wanted to finish out with some underlying fundamentals in the Bitcoin mining space. If we jump over to Luxor hash price index, Anthony, you can see hash price now above $59 in tandem with Bitcoin kind of above the 109, 110 region there. So that's very bullish for the miners. That's the highest we've seen since halving. And that's obviously going to have an impact on market cap and HODL valuation as it relates to this table.
Yeah, absolutely. $59 is getting close to where it needs to be. These miners will be happy to seeing it getting close to 60. Remember, pre-halving, it was $110 was the hash price then. So obviously miles away from that, and that's expected. The network global hash rate on a 7-day moving average is way above 900 now. So again, that's a cause for concern. A lot more machines on, and it would suggest that we've been breaching 1,000 exahash over the last few days to achieve that 7-day moving average, because we know from just over a week ago it had dropped significantly down to about 634. So as quickly as it's gone down, it's risen again, and we're into sort of like literally all-time high 7-day average, and that's reflected in the mining difficulty adjustment, which should be changing around about the 12th of July. So at the moment, it's expecting that all the benefits we received last time are going to be taken away. It looks like it's gone up by a similar percent, about 7% up there. And the reason for that is it's taking 9 minutes and 21 seconds to mine a block. It's supposed to take 10 minutes. So it's been done 50 seconds quicker. So the adjustment will take account of that. They'll make it a little bit harder for miners to achieve the reward and bring it back closer to 10. And if it doesn't get closer to 10, we know that in 2 weeks' time after that, the adjustment will occur again to make sure it goes on track. So, the algorithm there, it knows what difficulty to apply to get it back to 10 minutes. But obviously, changes in the global hash rate will determine how it needs to be changed again in the following 2 weeks. So, at the moment, it's good this last 2 weeks. This last 2 weeks has been great for miners. So, hopefully they've been able to make more use in the early parts of July than they did in June, because we saw a lot of miners have significantly less production when you look at the amount they were mining per day based on hash rate. It was pretty much 10-15% down across the board in terms of that. The only ones, those miners that were doing reasonably okay was those that were growing hash rate during June, and we saw the two big ones, CleanSpark and IREN, achieve their 50 exahash targets, but still, just managed to eke a little bit more in terms of daily Bitcoin production than they were at the previous month with more hash rate online. So it's a challenge for miners at the moment. Q2's results will be coming out, in the next month or so when we start seeing the second quarter of 2025 being announced there. We know there's going to be some green shoots because of obviously the Bitcoin price has effectively finished, $24,000 higher than it did at the end of Q1. So everyone with a HODL that we've talked about today will have significantly more additional valuation going through their profit and loss or their income statement. Mara Holdings, Riot Platforms, CleanSpark, Hut8, some of the big miners with big hodls, they're going to see significant green shoots on their balance sheet. Once we take those away, we start looking at the mining numbers. So that's the revenues less the costs. Then it becomes an interesting situation. I really want to see who's actually been able to produce, full profits for getting, this FESB ruling on mining in a quarter where the average price was over $100,000 effectively throughout the period. And that gives you an insight then as to the conversation we had with Sam Tabar about why he's moved to HPC because of the Bitcoin price. And we know IREN will probably be certainly in profit for that second quarter. How many other miners can actually mine full costs, including depreciation, including stock compensation, at the levels that IREN do? It'll be interesting to see.
Yeah, it certainly will be. Looking forward to this round of earnings for sure, Anthony. And the final piece we wanted to throw in here, you guys, Friday, our newsletter comes out. We just reviewed the draft of that today. Looks great. So make sure you guys sign up for that. Not only do you get updates on Miner Madness, we've got the top movers in the sector for the week and some exclusive or behind the scenes data and analysis that you won't find anywhere else. So with that being said, let us know in the comment section below, you guys, how are you feeling about the market cap of the miners right now compared to some of these other treasury companies, whether that's Bitcoin or Ethereum? Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.